To better discuss these figures is joining us Mr. Arun Leslie John, Senior Analyst at Century Finance. Thank you, sir, for joining us. It's always a pleasure to have you. Let us start with the UAE closing and the very calm situation that you are witnessing today. Could this be actually explained after we are seeing some momentum in the UAE? And today, of course, we see that the situation is calming down when it comes to the indicators. What's your reading?
So, as for the UAE markets, the momentum has been very strong in the past few weeks. So, in fact, the global markets also are very strong. So, we would expect the markets to remain in a strong trajectory for the coming weeks also, in spite of the global headline risk. As you know, globally, Trump has threatened a tariff for he has already planning to impose some 25% duty on semiconductor exports and some other major export categories. So there is always a headline risk, but as far we can see, the Trump administration in the US so far has not done any major tariff. They are more on threatening. They are not done, in fact, executed a major import tariff. So we expect the global markets to stay strong. The global economic growth also is likely to be stable. US economic growth also is expected to be stable. So this should translate to a positive performance for the UAE markets, especially for the DFM, because the DFM valuations are much attractive when compared to the global markets. DFM, if you can see, even now it is trading near 10.5 to 11 times price earnings ratio from a forward perspective. The dividend yields of the aggregate index are still near 5%, and these numbers are very attractive. Even the Abu Dhabi stock market, ADSMI, the index is trading at about 14 times the forward valuation. Price earnings ratio. So both the major UAE stock indices, they are trading at reasonably attractive valuations, Dubai in particular. So we would expect the momentum in the stock markets here to continue. And again, if I can add, as we all know, UAE tries to maintain a neutral stance in the global dispute. A rise in uncertainty across the globe, a rise in trade tensions across the globe might direct more trade flows to the United Arab Emirates. So I don't see the UAE getting impacted in the near term.
So you have mentioned the developments, whether we're talking about internal or external developments in the Emirates. But according to you, after the increases that we have witnessed in terms of some equities, the major ones more specifically, to what extent do you believe that we can see an opportunity for the investor to actually re-enter these equities? Of course, I'm talking about the equities that were within this scope and within this margin. What's your reading about the situation?
Investors, there has been a strong rally, but again, the rally has been powered by fundamentals. So, it is tough to say whether there will be a dip in the markets in the near term. Having said that, any dip in the UAE markets is likely to be a good opportunity to enter. If we take the case of a DFM index, the largest company by weightage is MR Properties. So even MR Properties right now is trading at about 10 times price earnings ratio. The forward dividend yield is expected to be greater than 6%. So I would suggest that investors should be not wait for a dip, at least start entering at the current market levels. A premier real estate company in UAE is available for 10 times earnings. It can't get more attractive than this. So as for investors, there are attractive opportunities even among the market leaders. So I would say make use of them.
We would like to thank you very much, Mr. Arun Leslie John, Chief Market Analyst at Century Financial. Thank you, sir. It was a pleasure having you.